Welcome to the deep dive. So you've brought us a really interesting stack of sources today. It looks like we've got two big narratives kind of colliding in the market right now, driving billions.
That's right. On one hand, you've got, well, the establishment, almost, BNB, the ecosystem token, just blasting past the $1,000 mark. Really foundational strength showing through.
And on the other side?
A completely different story. A fierce, high-stakes battle heating up in the derivative space, what some are calling the DEX war. And the focus there is this explosive new platform, Aster.
Okay, so we've got stability and growth meeting aggressive, almost disruptive competition.
Exactly. And our mission today really is to unpack what's driving both. We need to look at the mix of macro trends, political shifts like regulatory clarity, and the tech breakthroughs that push the BNB up.
And then dive deep into Aster, the tech, the strategy, the controversy, and the risks, because it sounds like there are quite a few.
Oh, definitely. There's a lot of hype, but also some serious questions about centralization with Aster, ticker Aster.
Right. So we're not just, listing headlines. We're digging into what this all means for you, the listener, for the capital you might have deployed, and honestly, how the playbook for building in DeFi seems to be changing right now.
Yeah, it's evolving fast. Let's jump in.
Okay, part one. Let's start with 1NB. Hitting over $1,000. I saw one report mentioning a peak valuation around, $1,074.5 billion. That's massive.
It is. And like I said, something that big hitting a new all-time high, it's ever just one thing. The sources are pretty clear. This was like a concerto of global trends all hitting at once.
A concerto. I like that. And maybe the lead instrument was the macro environment finally easing up.
Absolutely. The Fed cutting rates by 25 basis points. That signals the start, potentially, of an easing cycle. Chipper money.
Which always flows into risk assets, right? But here's the question. How much of BNB's rise was just that general liquidity looking for a home versus actual fundamental strength?
Yeah, that's always the balance. The macro tailwind, the cheaper capital, that definitely creates the appetite. You see it in things like the altcoin season index hitting 80 in 2025.
Yeah.
Money's rotating.
Okay, so the fuel was there.
Right. But what really let BNB catch fire, according to these sources, was removing this huge lingering threat. A regulatory landmine, essentially.
You mean the SEC, withdrawing those lawsuits against Binance, Binance US, and CZ himself back in May.
Exactly. That was enormous. For years, the big fear, the main attack vector, was that BNB could be declared an unregistered security. Huge uncertainty.
And when the SEC backed off.
That cloud just lifted. Overnight, really. So you, the listener, could suddenly look at BNB based on its actual use case, its ecosystem strength, without this massive discount for potential regulatory disaster.
Okay, so wow. Regulatory de-risking meets macro easing. That's a powerful combination. You don't see that often.
Very rare.
Yeah.
And then you look inside the ecosystem, and the fundamentals were actually improving at the same time. We know about the deflationary model, for instance.
Right, the quarterly burns.
Yeah, they're relentless with it. The 30-second burn back in July 2025 took about 1.6 million BNB out of circulation. Supply keeps shrinking, down to around 139 million now.
Scarcity meeting demand, classic. But what about the tech? Because BNB chain used to get criticized for, being slow and expensive sometimes.
And that's where this story gets really compelling. The sources highlight a massive technical overhaul. Gas fees reportedly dropped tenfold overnight.
Tenfold? That's huge for usability.
Makes a world of difference.
Yeah.
And block times, how fast your transaction confirms. They apparently went from an okay 3 seconds down to a blazing 0.75 seconds.
Sub-second finality. Okay, that puts it in a different league. Suddenly it's competing on cost and speed, even against some centralized exchanges maybe.
That's a goal, yeah.
Yeah.
It directly tackles those old scalability complaints. Lower fees, faster settlement. It makes the chain way more attractive.
But are people actually trusting it enough to move serious money? Is the TVL reflecting this?
It seems so. The total value lock, the TVL, on BNB chain apparently soared to nearly $7.8 billion. That suggests real confidence is building.
And it's not just trading driving that.
No, that's the other key point.
Yeah.
They filled infrastructure gaps, like launching their own native stablecoin, USD1. Remember BUSD getting shut down in 2023?
Yeah.
This fills that void.
Okay. Native stablecoin, that's important.
Crucial. And beyond DeFi, you're seeing hundreds of AI projects deploying on the chain. It shows builders are coming for reasons other than just cheap transactions. It's becoming a more diverse ecosystem.
Okay, so a really strong, multifaceted story for BNB. Regulation, macro, tech, fundamentals, all lining up. All right, let's switch gears then. from the base layer, BNB chain, to the application layer. And you said the hottest area right now is decentralized perpetuals, perp
Yeah, it's a sector that's absolutely exploding. Perp DEXs are now apparently doing something like 25, 26% of all perpetuals volume, including the big CEXs. That's a huge slice of the market.
That's not niche anymore. That's serious volume. And this is where Aster comes roaring in.
Roaring in is right.
Mm.
Using what one source called a Trojan horse strategy, it's actually a merger of two projects, Asterus, which focused on yield, and APX, which was the trading platform. They combined forces.
And the result?
Immediate scale. In just the first half of 2025, Aster reportedly processed $58 billion in trading volume. That grabbed them nearly 20% of the entire perp DX market share almost overnight.
58 billion. Wow. How did they attract that much liquidity so fast?
Well, this is the clever part, the sticky liquidity flywheel idea. They designed the system so your capital essentially does three jobs at once.
3 jobs. Oh.
Okay, so when you deposit funds, that capital provides liquidity for trading on their exchange, ASTERUSDT. That's job one.
Standard liquidity providing. Got it.
But it also acts as liquid staking for BNB through their as BNB token, job two. And potentially, you can use it as collateral via their own yield-bearing stablecoin, USDF, job three.
Hold on, USDF. I thought the BNB chain stablecoin was USD1.
Good catch, yes. USD1 is the native chain-wide stablecoin. USDF is Aster's own unique stablecoin that lives inside their ecosystem and generates yield.
Oh, okay. So by making the same capital work harder, generating yield from multiple sources.
There's much less reason for that capital to ever leave their system. It's sticky. That's a really smart strategic moat they're building.
Clever. And what about the trading experience itself? Are they aiming for pros or retail?
Both, actually. They have this dual mode setup. Their simple mode, which uses their on-chain liquidity pool, the ALP, Aster Liquidity Pool. That's where they offer that crazy leverage up to 1001x.
1001x. Okay, that's definitely aiming for the high-risk retail crowd. Huge hook, but wow, the risk.
Exactly. But then they also have Pro mode, and that runs on a central limit order book, a CLO, much more like a traditional exchange aimed at serious traders.
And they have specific features for those pros.
Yes, the key one highlighted is hidden orders. It's basically a dark pool. It lets large traders place big limit orders without revealing their hand on the public order book.
Reducing front-running risk. Okay, that's a big deal for institutions or whales.
Absolutely paramount if you're moving serious size.
So Aster's got this multi-pronged strategy. Sticky liquidity, dual modes, pro features. But there's still the challenger, right? Hyperliquid set the benchmark.
They did. Hyperliquid's approach was fundamentally different. They didn't just build an app on a chain. They built their own chain, a sovereign layer 1, an app chain.
Designed purely for trading speed.
Precisely. Think of it like Hyperliquid built a dedicated Formula 1 track just for racing. Super fast, super optimized, quoting speeds up to 200,000 orders per second.
And Aster, in this analogy.
Aster is more like taking a high-performance road car, the dApp, running on BNB chain, and modifying it heavily to try and compete on that F1 track.
So a fundamental difference in architecture, performance versus maybe strategic integration.
That's the tension exactly. And you see it in the metrics. Aster did briefly flip Hyperliquid in total value locked, hitting $674 million versus Hyperliquid's $671 million, a close race there.
But day-to-day activity.
Hyperliquid still seems to be leading significantly. One source showed $814 million in 24-hour volume for Hyperliquid compared to Aster's $429 million, and daily fees were higher too.
So the pure performance engine of Hyperliquid is still churning out more activity, even if Aster's pulling in comparable locked value.
For now, yes. It's a battle between strategic liquidity capture and raw technical performance. And interestingly, Binance seems to be watching this closely. They didn't just list ASTERUSDT futures.
Right. They also listed Trojan's DT futures around the same time, another competitor.
Exactly. Trojor was already on their alpha market, I believe. Listing both suggests Binance sees this whole perp DEX sector as incredibly competitive and worth hedging bets on multiple players.
Okay, so we have the tech and the strategy, but we can't ignore the, let's say, the behind-the-scenes aspect, the speculation around Binance's founder, CZ.
Yeah, that's definitely part of the Aster narrative. His congratulatory posts on X when Aster launched certainly fueled theories. The community chatter was that he was, quote, irritated by Hyperliquid's performance and wanted a strong competitor built on BNB chain.
Now, legally, he can't hold executive roles anymore after the settlement, right?
Correct. No executive roles at Binance. But he does provide mentorship through his separate venture, YZ Labs. And YZ Labs apparently incubated Aster.
Ah, so there is a direct connection through incubation and mentorship.
Yes. And a BNB chain representative apparently confirmed that Aster is officially supported by the ecosystem. That gives them a leg up resources, visibility, integration potential. It's a significant advantage.
Okay, so that high-level backing is real, even if indirect.
It seems so. And honestly, that narrative might be the only thing propping up the most controversial number we've seen in these sources, Aster's valuation.
Right, the $10 billion figure, which some critics were calling, what was the quote?
Complete garbage. Pretty blunt.
Complete garbage. Why such a strong reaction?
Well, the critics argue that if you look at Aster's actual current state product maturity, financials, the intrinsic value is maybe closer to $200 million.
Okay, $200 million versus a $10 billion narrative valuation. That's a 50x difference. Who's driving that huge premium?
It suggests a lot of speculative retail interest, chasing the hype, the CZ connection, the next big thing. But the real control, the sources warn, lies with the early insiders. And this brings us to a massive risk factor you need to be aware of.
It is?
Extreme centralization of the token supply. On-chain data apparently shows something quite shocking.
Let me guess. It's not very decentralized.
Not even close. The data suggests 96% of the total Aster supply is concentrated in just 6 wallets.
96%. In 6 wallets, that's basically just founder and early backer control. It's like pre-IPO equity held by a tiny group.
Exactly. Forget decentralization for now. This means one entity, or a very small coordinated group, essentially holds the fate of the entire token price in their hands.
And that control becomes critical because of
the looming unlock. There's a critical withdrawal unlock date coming up. October 1st.
October 1st. That's when early investors or the team get access to sell tokens that were previously locked.
Precisely. And when 96% of the supply is sitting in just 6 wallets, if even 1 or 2 of those decide to cash out heavily on October 1st...
it could trigger a massive sell-off, panic selling from everyone else, a potential liquidity crisis.
That's the fear. It's a huge structural risk hanging over the project, completely separate from the tech or the strategy.
Okay, that's a serious red flag. Does Aster have a plan to address this centralization perception or this risk?
Well, their long-term plan implicitly acknowledges the limitations of their current setup. They know running a dApp on BNB chain, even a fast one, might not be enough to beat Hyperliquid's dedicated L1 in the long run.
So what's the endgame?
Their ultimate ambition, according to the sources, is to launch the Aster chain. They describe it as a high-performance, ZK-powered L1.
DK-powered layer 1. So basically, copy Hyperliquid's strategy, build their own dedicated Formula 1 track.
That seems to be the plan. Mirror the competitor's core advantage. But that's a really difficult transition to pull off.
How so?
They need to convince their entire user base and all that sticky liquidity they work so hard to capture to migrate from the relative safety and familiarity of BNB chain to a brand new, unproven layer 1.
Yeah, migrating liquidity and users is notoriously hard. A lot can go wrong.
Exactly. So their whole long-term viability kind of hinges on successfully executing this very risky L1 migration, which is basically admitting their initial dApp approach has performance limits.
Okay, so massive risks, huge valuation questions. But despite all that, the market is paying attention right now, isn't it?
Oh, absolutely. The market action has been significant. Institutional interest, or at least trading interest, is definitely there.
And the big catalyst was the Binance listing, right?
Yes. Getting those US2 margin perpetual contracts listed on Binance Futures on September 19th was huge, not just for ASTERUSDT, but also for TradeOverSDT, that competitor we mentioned.
Giving both immediate legitimacy, massive visibility, and up to 50x leverage access.
Yeah. Exactly. The ultimate stamp of approval for traders. And the impact was immediate.
Volume spiked.
Hugely. Acer's trading volume apparently hit $1.9 billion shortly after the listing. One analysis put it as the 5th biggest volume coin that day, if you exclude stablecoins.
$1.9 billion. Okay, so the mindshare, the trading interest, it's undeniable right now, fueled by the strategy, the backers, the whole narrative.
Definitely. The market is trading the story for now.
So let's try and synthesize this for you, the listener. We've covered a lot. 2 key threads emerge from this deep dive, right?
I think so. First, the BNB story. That surge past $1,000 wasn't just hype. It seems genuinely underpinned by this rare convergence. The regulatory cloud lifting in the U.S., the macro environment turning favorable, and real measurable improvements in the BNB chain's tech and ecosystem utility.
Which makes this rally feel maybe more sustainable than some past crypto booms driven purely by speculation.
Potentially, yes. It feels like there's a more solid foundation this time.
Okay, that's takeaway 1. What's the second?
The second is about the cutting edge, the DEX wars. What Aster's rapid rise shows is that this decentralized derivative space is maturing incredibly fast, and it demands extreme performance.
And to compete with the established performance kings like Hyperliquid.
Newcomers like Aster seem to feel they have to adopt these really aggressive, initially quite centralized strategies like the Trojan horse liquidity model just to get in the game quickly, even if that means taking on significant short-term risks like that massive token concentration.
So it's like the stability and fundamental growth of the base layer, BNB, is actually enabling this next wave of high-risk, high-reward innovation like Aster on top.
That's a good way to put it. One enables the other. But that innovation comes with, as you said, a huge asterisk.
Which brings us to the final thought, the provocative question to leave you with.
Given everything we've discussed,
Mm-hmm.
especially that extreme 96% supply concentration in just 6 wallets and that critical October 1st unlock date looming, the real question is, can Aster's long-term promise, the vision of a future high-performance Aster chain, actually overcome the massive present risks? The risk of that supply overhang, the potential for a catastrophic unlock event.
Can the future dream survive the current reality?
That's it. This tension between innovation and extreme centralization, that's the defining feature of this moment in the market. That's what you need to watch.
Watch those wallets, watch that date. Fascinating stuff. We'll catch you on the next deep dive.